Hi, I'm Elena of Financialdemics, and this is the third video in our Investing 101 series. In the first video, we talked about why you need to start, and the second video, we talked about setting your investment goals. And in this video, we're going to talk a little bit about the stock market so that you can get a basic understanding of how it works. So if you haven't seen those videos, I'm going to link a playlist right here, and after you watch this video, go back and check out those videos. Okay, so let's just talk about the stock market. So the stock exchanges is basically where stocks and bonds and other assets are traded. So when I talk about the stock exchange, these are for individual stocks. So in previous videos, I talked about how you can get individual stocks, individual bonds, but then I talked about mutual funds, which can be a fund comprised of many different stocks or many different bonds or a combination of both. And I talked about ETFs, which are the same thing, but they are traded on an exchange. And then I think I also talked about just index funds so that you can have an understanding of what those are. So let's talk about how a stock exchange operates. So a company has to offer an initial public offering, which is called an IPO. And the reason why a company would offer an IPO, because it's a way for them to raise funds for the company by offering shares of the company for sale to the general public. So two of the major exchanges that we always hear about is the New York Stock Exchange and NASDAQ. So sometimes you'll see that someone famous that you probably follow for other reasons was actually at the New York Stock Exchange ringing the bell. So there's different participants in the game of selling stocks, right? They are the buyers. Those are the people who are going to buy the shares. So if you're looking at this video, you're looking to become a buyer. Now, once you own some shares, right, and you may decide that maybe I want to get out of that particular stock or that particular investment, then you become the seller and you're the one selling the shares. And then there are sometimes brokers. So brokers are people who act as intermediaries between the buyers and the sellers so that you can buy and sell shares. So just know that piece. And I know you might think oh, I already knew that piece, but you never know. I want to make sure you understand the process completely. So once you have purchased or sold your shares, that is considered a trade. Once that trade is acted upon, then clearinghouses make sure that trade is complete, and then it is settled within a couple days. So just going back to when I mentioned the clearinghouse, I just want to give you an explanation of what the clearinghouse does. They just make sure they provide the security and make sure that the trade is properly settled so there's no issues when you are buying and selling. And sorry y'all, I just realized my mic wasn't plugged in, so I probably sound a little echoey. Hopefully the sound is better, and we're gonna keep going. So some things to know about the stock market, especially if you're brand new to it. It opens up at 9 a.m. and then it closes at 4 p.m. So if you do not get your trade in before 4 p.m. that evening, if you try to execute that trade afterwards, they would probably not execute that trade until 9 a.m. the next morning when the stock market opens up. Now remember, they're only open on business days. If it's a bank holiday, then the stock market may be closed. So those are things you have to consider. So there are some days that the stock market is not open, even though it is a weekday, which is typically holidays. And then they're not open on the weekend. Now, there is some after hours trading that can be done, but that depends on who you have an account with, the type of accounts that you have. If you are looking to learn how to invest better and grow your wealth, then I have partnered with One Savvy Dollar. So One Savvy Dollar is an amazing real estate and stock investor. But let me tell you about Ogechi, who runs One Savvy Dollar. She is actually going to be running a 6-week course that comes with group coaching, and she is going to basically provide you with the blueprint to be able to grow your investment account to $100,000. If you are a beginner investor and you're really trying to understand how to invest, understand how to pick your stocks and which stocks to pick, know how to actually analyze your portfolio so that you are sticking with the right investments in your stock portfolio, then you definitely want to check out the link below to her The Blueprint to 100K investing course. It starts on January 6th, and she is going to be working with you to help you understand the stock market and which stocks that you should pick. So if you're interested, definitely check the link in the description box below. Go ahead and click on it and sign up, because you don't want to miss her next cohort that is starting on January 6th. The one thing about the stock market, when you're looking to buy and sell stocks, you are actually able to see what is going on with that stock once the market opens up. So it's very clear, no matter what brokerage house you use to execute your transactions, you're able to see what the price of that stock is immediately, and know that that stock is moving constantly through the day. So unless you lock in immediately and make that trade, if you look at that stock at 9 a.m. and then you get sidetracked and you don't come back till 9:30, it is very possible that that stock has a whole different price at 9:30. Now, it may not be completely like far off from where you originally saw it, but just know that it's a possibility that it could be, just depending on what's going on. And for those of you who are a little worried, you may be worried about the change in price of the stock, but then also just know that the stock market is heavily regulated. And when I say heavily, I say heavily, and I'm saying this as a person who worked in the field for years. It is heavily regulated, and a lot of things they do are to protect you as the investor from anything happening. So know that there are rules and protections in place to protect the investor. Now, no matter what, you will have to open up a brokerage account in order to make any trades on the stock, in the stock market. You can open up at different companies. I mentioned 2 companies in previous videos. But there are some other companies out there that, let's say they're fintech companies, and so they also offer the opportunity for you to invest or for you to open up brokerage accounts with them too. I will drop a couple of them in the description box below if you're interested in knowing what companies that I personally would actually recommend to you as far as companies to use as your brokerage house. Now, real quick, let's have a quick discussion about the companies that issue the stocks, because I have heard, and I'm just going off of commentary that has been given to me, that companies issue stocks because they're just trying to basically scam the public out of their money. And that's not true. If a company is issuing stocks, typically they're trying to raise some capital. It actually gives the company more credibility when a company is actually public and traded on the stock exchange than it does if a company is private, which, don't get me wrong, private companies can gain credibility. But once you mention that a company is public, for the most part, the sentiment, let me say that, right, is that that company is reputable. And that's because there's a lot of steps a company has to go through to actually issue an initial public offering. Now, what I'm going to say to you, because I don't want you to think that I'm saying every single company does the right thing, but just know that the whole process, they have to be able to uphold to what they have proven. Now, we've heard about companies who have not, okay? But just know that that is the reason why they have to go through the steps that they have to go through to issue an IPO. Now, I also say, like, when you buy into stock, now you own a portion of that company. So the more you stay invested, the more you actually own of that company. But, you know, it would take a high percentage of ownership to be able to have control of a company. Keep that in mind. So when a company does offer up their stock for purchase to the general public, they do have a responsibility to perform well and hit their quarterly targets, because that information becomes public. They have to come out and release their numbers every quarter. And that's why in a previous video I talked about how stocks also, their performance and their value is based off of customer sentiment, because how they perform quarterly is going to affect how people feel about that stock and whether or not people feel like that company is going to be able to continue to run based off of how they are performing. And that's information you want to pay attention to, especially if you're investing in individual stocks. You want to, especially if you are doing it as a long-term investor, you want to make sure that you pay attention to how the companies that you are investing in. So this is just a quick video to help you understand how the stock exchange works. Let me know if you have additional questions below in the comments. If you're interested in the blueprint to 100K in the stock market, then check out the description box below. There's a link to the course there. And I'll see you in the next video where we're going to talk about the common mistakes that investors tend to make when they are investing in the stock market. And if you're not sure why you should start investing, then definitely check this video out here.